Hey, good morning, everyone, and welcome to the PivotBoss Pre-Market Report for July 15th, 2016. I'm Frank Ochoa, aka PivotBoss. Here's a look at the ES in a daily time frame. So far, we continue to trade within this expanding type of range here. Yesterday, we began to see a little bit of initial weakness here on these highs as price traded and closed near the center portion of the range after the early rejection above 2163s. Right now we have a very narrow range heading into the current RTH session, and it looks like the momentum is dying down, right? So we had a big swift move up, momentum died down, it held another big swift move up, and now prices are just holding. The key level at the moment is 2120. That's been the key level since the very beginning of the week when price pushed through. So given the fact that we continue to see higher highs and higher lows day over day, implies that price continues to push higher. At some point, we're going to see rejection. Perhaps we've seen the rejection here. Who knows? And if so, once we do see that clean rejection or that surefire rejection, you're likely going to see a fade back toward 2120 for a retest. At that point, since bulls got paid on the way up, bulls would want to defend 2120 and look for a continuation above. Failure to hold above 2120 would open up a return back to value at 2086. On a one-year basis, or 2075 half on a 5-year basis. Now, if we take a look at let's take a look at the extension for a moment. If I show my drawings here, you'll see I have key ranges that are built out both from a higher time frame perspective and on an intraday. But focus on this 2172 here. 2172 is the 25% expansion from the key range here from the top at 2104s, and that was the major level before that I mentioned. Hey, this is the zone that they're defending. If the stops come out, watch out. But 2104 was it, and when the stops came out, we've never seen them come back to that level. So this would be 25% expansion from that level. So 2172 could be the zone where we ultimately see the rejection back toward 2120. On an intraday basis here, if we take a look at ES on an intraday chart, what you'll notice is the overnight range is very tight and narrow. Right now you have two-sided trade, bears defending the top and returning price back to the lows, bulls defending the bottom, returning price back to highs. So it's a two-sided trade, very nice. Very nice and organized. It's rather narrow, so that means that we could see a widening of that range. But overall, what you're seeing here is something that I mentioned to my traders yesterday, which is the fact that we had an impulse range rally to the upside, 2168, and it immediately dropped back toward the midpoint of that range. Once that happened, prices never came into the rejection portion of the day. Instead, you saw lower and lower highs as price was absorbed at lower and lower price levels. That's typically indicative of responsive sellers, larger passive sellers with limit orders, iceberg orders, defending and absorbing, looking to seal this high and create lower resistance, which would in turn lead to lower price levels. So you can see some of the characteristics you would typically look for ahead of perhaps the next sell-off. So we're seeing those things, but again, if prices push through 2164s here, we could be looking at another squeeze ahead, as a lot of the bears that are selling here are starting to put their stops just above these levels. So keep that in mind. So right now, two-sided trade, you look to fade anywhere in the 62, 63 zone, back down. There's a major LVN here at 2150 right now, short term. So bulls, the first test at that area could be a fade back up. Pushing through that area would imply a retest of the previous session's low and perhaps lower. Let's take a look at crude oil. So we take a look at crude oil here. This is a daily time frame. What we've seen here is very narrow price trading behavior over the last session. Price trading within a very narrow range, and you see that for the most part we're still trading within that range. Two key levels I talked about were 45s and 45.88s, and right now that's been the range over the last 2 days. Just now testing 45.88s here pre-market. The idea right now is that the fact that price is trading around 2-year value at 45.88 tells you that there could be a lot of chop back and forth. On an intraday time frame, you're seeing trading below it, then you're seeing trading above it. Now you're seeing trading back below it. So it's clear that price is trading around value right now. And when that's happening, there's no real edge. So there's no real actionable idea at the moment. What I can say is that price is clearly coiling up. A lot of energy is being built up around this area. At some point, we will see some nice expansion from this range. And I think the key level to watch here on the downside is 45. Failure to hold that level could open up new lows, which in turn leads to a move into 43, 42, and the next level down, which would be 41. So each of those two levels are the key levels to target both on ADR basis, key range basis, and also just plain price structure basis. Now, above 45.88, if we zoom in a little bit more again, above 45.88 would open up a return to recent highs at 47, and we could even see a little bit higher than that. So right now, it's just very tough to tell. You got to be very, very careful and be very disciplined about your entries. If you don't see anything you like right now, stand away, stand on the sidelines. Being on the sidelines is a play as well. And right now we're just chopping around value and there's no real edge at the moment. So you just got to be patient. On an intraday basis, there you go. On an intraday basis, you can see our 45s and 45.12s have been very important. That's the zone yesterday we talked about that bulls wanted to defend. We mentioned 45 to 45.12 yesterday, and you can see that it was defended early in the day, which is what gave us the idea to defend and continue to defend. And here it was again yesterday, perfectly defending. And here we are again, pre-market, perfectly seeing defenses off that area. So right now, what this looks like is an attempt to absorb all of that supply here and eventually squeeze this thing back toward recent highs. Call it 46.71, 47s. So that's what's happening here. Price has found a low here. It pots back above, and now there's higher support. This is absorption here. This is what we talked about yesterday, both pre-market and in the room, and you can see it coming to fruition. It's playing out as we expected. On the top side, you're seeing bears come in and defend the top end as well. So it's been a two-sided trade. But for the most part, bulls want to keep this area bid for a continuation higher through 46s. If 45s can't hold, all of the bulls here that have been defending have a lot of sell stops here, and that's going to spark a major sell-off into 43, 42, and 41. So keep that in mind. Right now, the ball game is to fade the edges with the likelihood that we squeeze through 46s. The bulls are really trying to get that to play out. All right, let's take a look at gold right now. Again, gold has been kind of our cautionary tale. Been very, very volatile here lately. We've been mostly bullish this entire time. We've only been bearish on short-term spurts back and forth, right? But every time we get down here and we pull back, we've been very bullish, saying, hey, we likely continue higher. So this thing has been bullish since the beginning of the year. Somebody knew something right, and they've been right. This is 1306 to 1307, 1310. There's a nice LV in there. Previous highs, price went bid, and here we are. So I mentioned before that all this right here can be a lot of chop, but for the most part, I believe that this is a good buy. So if price get into this zone here, 1306 to 1310, whatever that is, that could be a great area to defend for an opportunity at 1370 to 1380. So this could be a solid 60 or 70 handle win. If there's a failure to hold above 1305s, that's an easy sell-off, likely back toward value at 2043 into the last low at 2053. So there's a nice 10-point zone there. So we have some nice levels here, but we're not yet at an actionable zone just yet. All right, let's take a look at the NQ. Here's the NQ. 45.50 right now has been our key level in this one. Very nice impulse low. We haven't yet found an impulse high, although yesterday was showing signs that it was starting to begin to develop. That doesn't mean we can't see new highs again, but you can start to see now after this big move up here, we're seeing a little bit of failure to continue to push prices higher. So again, 45.50 is the big level. It can do whatever it wants up here, but if it can't hold it at some point, everyone that got long up here and didn't get paid will start to get their stops run. In that case, you're likely running back toward value. Value here in the chart is 43.2875. So again, Nothing yet that's very actionable on a higher time frame just yet. We're lying, we're stalking, we're waiting, lying in wait, waiting for the opportunity, and boom, this could happen. Until then, it's still a buy the dip opportunity until proven otherwise short term. And if we drop into the intraday time frame, you can get a better idea about what's going on. On an intraday basis here, very similar to the ES, we had an impulse move that took us from the low through the high. That was the previous session. Found a high at 46.08 quarter, immediately rejected and sold off. Once that happened, it hit the midpoint of that range and never traded in the rejection portion the rest of the day. You see 4600, this is what I mentioned yesterday. Between 4590 and 4600 is where bears want to defend, with 4600 being the more key level, right? So 4595 to 4600 became the key zone that every time it went into that area, it was immediately offered yesterday, every single time. And it's still the case today. So the overnight high is right there at 45.95, and it's already been rejected. So this continues to be the case. We also have the bottom end down here where bulls are defending. That's 45.80s. So you see there's two-sided trade. So right now there's nothing really to do on a short-term basis in here until price gets out here. If price comes into 45.95 to 4600, look to fade it back down. If price comes down into 45.80 to 45.75, look to fade it back up. You continue to do that until you see expansion. So we're going to wait for that. We're going to continue to look for fade opportunities. Once you see expansion from this range right here, it could be significant. And again, if there's any rejections above 4600, the implication is we may have topped out. In short term, we may need to see a correction. So something to keep an eye on. All right, that's it for now. Let's see how this thing plays out heading into the weekend. Good luck, trade well, and happy Friday.